7.18. Problem number 5. Come to page number 7.18. Problem number 5. Bandhana traders of Delhi purchased 10,000 pieces of sarees at the rate of 100 per saree. Bandhana traders of, just reduce the fans to 3. Bandhana traders of Delhi purchased 10,000 pieces of sarees at the rate of 100 per saree. Out of these sarees, 6,000 sarees were sent on consignment to Vastralaya of Jabalpur at the selling price of 120 per saree. The consignors paid 3,000 for packaging and for freight. Consignors have paid 3,000 for packaging and also for freight. Leave the difference. Next, Vastralaya sold, keep the door open. Vastralaya sold 5,000 sarees at the rate of 125 per saree and incurred 1,000 for selling expenses and remitted 5 lakh to Delhi on account. They are entitled to a commission of 5% on total sales plus a further 20% commission on any surplus price realized over 120 per saree. So who is the consignor and who is the consignee? Bandhana traders of Delhi is the consignor and Vastralaya of Jabalpur is the consignee. So let us start preparing the books of Bandhana traders. In the books of Bandhana traders, you have to prepare trading account also in this problem. Trading account, consignment account and Vastralaya of Jabalpur account. We have to prepare 3 accounts: trading account, debit, credit, consignment account, debit and credit, Vastralaya of Jabalpur account. So we are preparing these accounts in the books of the consignor Bandhana traders. In the books of Bandhana traders, trading account, consignment account and Vastralaya of Jabalpur account we have to prepare. Bandhana traders of Delhi purchased 10,000 pieces of sarees at the rate of 100 per saree. So Bandhana traders is now purchasing sarees. What is the entry that comes to our mind when they purchase sarees? Purchases account returned to cash or purchase account returned to creditors. Entire purchase is debited to the trading account. 2 purchases, 10,000 sarees or 10,000 sarees? 10,000 sarees at the rate of 100, 10 lakh rupees. So Bandhana traders has purchased sarees. We pass the entry purchases account returned to cash account or purchase account returned to creditor account. That purchase is debited to the trading account. 2 purchases, 10 lakh rupees. Now out of these 10,000 pieces of sarees, how many sarees were sent on consignment to Vastralaya of Jabalpur? Out of these sarees, 6,000 sarees were sent on consignment to Vastralaya of Jabalpur at the selling price of 120 per saree. So out of these sarees, 6,000 sarees were sent on consignment to Vastralaya of Jabalpur. Now we are sending some goods on consignment to the consignee. What is the entry we pass? Goods sent on consignment account letter to goods sent on consignment account letter to trading account. First entry, this entry should be passed with cost price. And the second entry, consignment account letter to goods sent on consignment. This should be passed at invoice price. You have to pass two entries. Goods sent on consignment account that are to trading account by goods sent on consignment. How many sarees were sent? 6,000 sarees at the rate of 100, 6 lakh. But when we record it in the consignment account, we have to record it at invoice price. Consignment account that are to goods sent on consignment. 6,000 sarees into 120, no? 7,20,000. See, if you want, I'll open the goods sent on consignment account also for you. When goods are sent on consignment, entries goods sent on consignment account that are to trading account. So goods sent on consignment account, we'll write to trading account. To trading account, how much amount? 6 lakh. This is the cost price. From where this has come? From the trading account. Goods sent on consignment account is debited. Now, these goods have been transferred to consignment account but at invoice price. What is going to be passed? Consignment account that are to goods sent on consignment account. We write here by consignment 7,20,000. If you observe, this account is not getting closed. So this account is not getting closed. The account is still open. This will get closed at the end of the, we can say, period when we remove the loading. Okay. So till now we can understand that when it is goods are sent on consignment, we pass the entry goods sent on consignment account or to trading account at cost. Then the next entry consignment account that are to goods sent on consignment is recorded at invoice price. This account is debited with cost, credited with invoice price. The account has not got closed. We will see how it gets closed later on. Continue. The consignors paid 3,000 for packaging and freight. Consignors have paid how much? 3,000 for packaging and freight. Please tell me what is the entry in the books of the consignor when they are paying 3,000 for packaging and freight. Consignment account that are to cash account. To cash account 3,000. Vastralaya sold 5,000 sarees at the rate of 125 per saree and incurred 1,000 for selling expenses. Vastralaya sold 5,000 sarees at the rate of 125 per saree. We'll assume for cash. Consignee is now selling the goods for cash. What is the entry in the books of the consignor? Consignee account that are to consignment account. So consignee account will write to consignment. How much? 5,000 into 125, 6,25,000. Here we'll write by Vastralaya 6,25,000. Next, and incurred 1,000 for selling expenses. And incurred 1,000 for selling expenses. Now, consignee has spent 1,000 for selling expenses. What is the entry in the books of the consignor? Consignment account data to consignee account 1,000. and remitted 5 lakh to Delhi on account. Now Vastralaya of Jabalpur has sent 5 lakhs to Vandana Traders. Vandana Traders is receiving 5 lakhs from the consignee. What is entry right? Cash or bank account at R2 Vastralaya account by cash or bank 5 lakh. By cash or bank 5 lakh. Clear everyone? Next. They are entitled to a commission of 5% on total sales plus a further 20% commission on any surplus price realized over 120 per saree. What is the meaning of that paragraph? They are entitled to a commission of 5% on total sales. That means on 6,25,000 they will get 5% plus if they have sold the saree above invoice price. If they have sold the saree above 120 rupees, on the extra price they can again take 20% as commission. Okay? Can we do it on calculator? Tell me, can you do it on calculator? Press on button. Type 6,25,000 into 5%. 5% on total sales. How much is it? 31,250. Press M plus button. Press M plus button. Now that number will go into memory. After that, when I tell, only then you will press the button. Don't press whatever buttons you want to press. Okay. Now, what is the second part? It says 20% commission on any surplus price realized over 120 per saree. Please tell me, at what price did Vastralaya sell the sarees in Jabalpur?
125.
They have sold it for 125. What was the invoice price? 120. How much surplus is realized per saree? Per saree we have realized 5 rupees per saree as surplus. On how many sarees? 5,000 sarees were sold, no? So now type 5,000 into 5. How much is it? Out of this 25,000, how much I can take as commission? 20%. Into 20%. How much do you get? 5,000. Again press M plus. Now MRC. What is the total commission now? 36,250 rupees is the total commission. Tell me what is the entry you write for commission? Consignment account at to consignee to Vastralaya 36,250 Vastralaya account by consignment 36,250. Did you all understand how I got that commission? On total sales 5% plus on every saree we realize 5 rupees extra. Out of that 20%. 5,000 sarees 5 rupees extra. 25,000 into 20%. 5,000. 31,250 plus 5,000 is 36,250. Next. 3,000 sarees were sold at 110 per saree. What 3,000 sarees at 110 per saree? If you see, Vandana Traders of Delhi purchased 10,000 sarees. Out of them, how many were sent on consignment? 6,000. So they were left with another 4,000 sarees. Out of those 4,000 sarees, how many sarees now they have sold? 3,000 sarees they have sold at what price? 110 per saree. So this is sales which is happening at Delhi, not at Jabalpur. Is it clear? So when the consignor is selling goods, what is entry right? Cash or bank account, at R2 sales account. Sales account will be credited to trading account. By sales account. 3,000 sarees into 110, 3,30,000. This is not sales by consignee, this is sales by consignor at his place. Clear? Now if I can observe, there is a stock of 1,000 sarees left here. By closing stock, 1,000 sarees, value right now I will put a question mark. In consignment also, how many sarees are left? Out of 6,000 sarees, 5,000 sarees were sold, no? Out of 6,000 sarees, 5,000 sarees are sold. Again there is a stock of 1,000 sarees by consignment stock. 1,000 sarees, value question mark. Now write down valuation of closing stock at Delhi. You have to find out the closing stock here. But if you read the last two sentences, owing to fall in market price, the value of inventories of sarees in hand is to be reduced by 10%. You have to reduce it by 10% now. Write down. Value of closing stock. Value of closing stock at Delhi. Right. Particulars rupees. Write down. Cost price of sarees in hand. Cost price of sarees in hand. Cost price of sarees in hand, 1000 into 100, 1 lakh. Less fall in value 10%. Less fall in value. Fall in value 10%. That is 10,000. You will get the value of closing stock 90,000. You know that when the stock is sold, it will not realize 1 lakh. We know that it is going to realize 10% less. So in such case, you have to reduce the value of the asset. So by closing stock, right here 90,000. Because there is some fall in value. Next. Come to consignment stock. Again there is 1000 sarees of stock now. Write down first of all valuation of consignment stock at Jabalpur. Write down entry. Don't write entry. Particulars calculation rupees. You write invoice price of stock. Invoice price of stock. Invoice price of stock. 1000 into 120, 1,20,000. 1000 into 120, 1,20,000. That was invoice price, no?
Yes.
Add proportionate consignor expenses. Add proportionate consignor expenses. Look at the board. 3,000 rupees was spent by the consignors and sending the sarees to the consignee, no?
Yes.
Out of these 3,000 rupees, this was spent for 6,000 sarees. 1,000 sarees are unsold. So, right, if 6,000 sarees is equal to 3,000 rupees, 1,000 sarees is equal to how much? How much amount? 500 rupees. That's it, total. Consignee did not spend any non-selling expenses on this particular stock. How much do you get? 1,20,500. This is the value of closing stock at invoice price. Wait, 1,20,500 value of stock at invoice price. 120,500. Now you write less decline in market value. Less decline in market value. 10%. Less decline in market value. 10%. 12,050 you will subtract. 12,050 you will subtract. 10% of 1,20,500 is 1250. 12,050. What is the value left? 1,08,450. Okay. So right here 1,08,450 as the value of closing stock. This is invoice price less fall in value. This is invoice price less fall in value. This was cost price less fall in value. Is it clear, everyone? Now, before we calculate profits, I think we have to do some adjustments, no? Goods were debited at invoice price. You have to remove the loading by crediting the account. And similarly, closing stock value was found out by using invoice price. Loading has to be removed by debiting the consignment account. Yes or no? So write down now. Working note. I think you already know the loading, no? We know that cost price of each saree was 100, but whereas we have debited with 120, 20 rupees you have to remove, no? Loading. So right here, by goods sent on consignment, by goods sent on consignment, 6,000 sarees into 20, 1,20,000. I know boss, cost price is 100, but I have debited with 120. So whatever extra cash I have pumped in, I have removed it by crediting the account. Now observe, when you give a credit here, this account is debited to consignment account 20,000, 1,20,000. This account now gets closed. Clear? To remove loading, I have credited the account here. If this account is credited, this account is debited. Now see, account is getting closed. Is it clear? Trading account credited with cost, consignment account debited with invoice price, later on credited with loading. That means invoice price here, loading here. Invoice price here, loading here. Invoice price minus loading, cost. 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 Matching. Is it clear? Cost you read here, then here you debit invoice price. You credit loading. Invoice price minus loading is cost. Cost here, cost here. Exactly the same amount. Is it clear? Now write down next. Calculation of loading to be removed from closing stock. Within brackets, stock reserve. It's also called as unrealized profits. Calculation of stock reserve. You have started learning it here. This topic this concept will be there with you till the time your body is put in a graveyard. Okay? So please listen very carefully. IPCC level, this will not leave you. Final level, this will not leave you. After you become chartered accountant also it is not going to leave you. Write down. Calculation of stock reserve. See, stock reserve is nothing but the gas which is there in the closing stock. Some gas was pumped in, no, in the stock. That gas is to be found out now. So how can I find out how much gas is there? Calculate closing stock value at invoice price. Calculate closing stock value at cost price. Difference is nothing but gas. Write down. Calculation of closing stock at cost price. Calculation of closing stock at cost price. Same table, particulars, calculation, rupees. Particulars, calculation, rupees. Write down. Cost price of unsold sarees. 1000 into 100, 1 lakh. Correct? 1 lakh. Add proportionate consignor expenses. Add proportionate consignor expenses. 500. For 6,000 sarees it was 3,000. For 1,000 sarees yenta. For 6,000 sarees 3,000 rupees aite. For 1,000 sarees yenta. For 6,000 sarees, if it is 3,000, for 1,000 sarees, how much is it? How much is it? 500. 500. Total Total 1,05,000 less decline. There is some fall, no? Less decline, 10% of above. Less decline, 10% of above. 10050. Correct? 1,05,000 into 10% is how much, ma? 10,050. 10050. Now you will get closing stock value at cost. At cost less decline. At cost less decline. It is invoice price less decline. This is cost less decline. How much is it? 90,450. Now I have closing stock at gas price. I have closing stock at cost price. Compare both of them. You will find out what is the gas which is there in this value of closing stock. Write down now. Stock reserve is equal to, see, technically speaking, you should not have shown 1,08,450. You should have valued closing stock at cost. What is the closing stock cost? Just now calculated 90,450. In place of writing 90,450, you have written 1,08,450. So how much gas is there in this 1,08,450? 18,000. Debit side you write. Will you calculate that? Stock reserve is equal to 1,08,450 minus 90,450. 1,08,450 minus 90,450. Look at the board, everyone. Here you should have written 90,450, but you wrote 1,08,450. You have given an excess credit. Remove the credit by debiting the account. So write debit side to stock reserve. To stock reserve. How much? 18,000. To stock reserve 18,000. Now let us calculate the profit from trading account. To gross profit. How much? Is it 20,000? 10,20,000 total of credit side. Loss.
7,000.
Correct, no? Sir? 20,000 profit. Next, consignment account, what do we have? Profit or loss? Consignment account, what do we have? Profit or loss? Tell me total of the credit side. 625, 723, 843, 450. Definitely more. To P&L account, profit. How much? 75,200. Clear, everyone? Vastralaya, how much cash still they have to pay? By cash 87,750, balancing figure. Now we will discuss about treatment of normal loss and abnormal loss. So what is normal loss? Please tell me. I want to know your views first of all. What do you mean by normal loss? What do you mean by abnormal loss?
Loss occurred in general business. Loss occurred in day-to-day transactions, general business.
General course of business loss occurs.
Okay. For explaining you what is normal loss and abnormal loss, normally I tell everyone a small story, which is something which is very interesting. So, by the end of the story, you'll understand what is normal loss and how to deal with normal loss. Okay. There is a mother. She has a son. Okay. 3 years, 4 years old, just going to play school. Okay. But his brain is big. Very, very intelligent fellow. Okay. Small in size, but carries lot of punch. So he comes back from school in the afternoon, goes to mother and says, "Mother, I want to eat something. Give me chocolates to eat." Mother says, "No, no, no. If you eat chocolates, your teeth will get spoiled, your health will get spoiled. I'll give you money. Now you're 4 years old, you know what is what. So go to the shop which is just at the end of the street in our colony, bring some apples." Let us say he's not 4, he's 5, 6 years old. His brain is now working. Okay. So she gives him a 100 rupee note. She says, "Take this 100 rupee note, give this note to the shopwala and bring apples." She's busy, she's not able to go to the shop and bring. And they know that apple seller very well, so she understands that that guy is not going to steal money or cheat the small guy. So he goes, runs to the shop. It's about half a kilometer from his home. Okay, 500 meters. If you say half a kilometer, it will feel very far. 500 meters, half a kilometer it is. Okay. So he slowly walks there, goes to the shop, gives the 100 rupee note and says, "Give me apples." The shopkeeper takes a cover, he puts 5 apples in it. Gives how many apples?
5.
Puts that 5 apples in it and he says, "Take." So he opens the apple, he opens the bag, and a nice sweet smell comes out of it. Apples, no? They smell very sweet. As soon as he smells the sweet smell, he feels like eating. Takes out one apple, cleans it with his knicker, and before he reaches home, one apple is swaha. One apple has gone into the stomach. He was very hungry. Okay, and you cannot stop a child from eating an apple or a sweet or a chocolate. God cannot stop him. Even if God comes and says you don't eat, he will eat. You cannot stop him. So he has eaten one apple. But he fears, he knows that if mom comes to know that I have eaten an apple without washing it, he is going to break my legs. So he finishes the apple before he reaches the home, cleans his mouth and everything. And as soon as he comes to home, he'll put the cover on the table and runs to the bathroom to clean his mouth and everything. Because he knows if mother comes to know, he is going to beat him. Mother, she opens the cover and she sees there are 4 apples. So she thinks, 100 rupees, 4 apples, okay. Price is 25. Okay. What was the real cost of the apple?
20.
100 by 5, it was 20. But now when the mother opens the cover, she feels there are only 4 apples. She thinks the shopwala has given only 4 apples. So according to her, what is the cost per apple? 25. How has it increased? The original cost was 20, but now the mother feels the cost is 25.
Reduce of stock.
Some loss happened, no, in between the consignor and the consignee. The agent, the transporter has done some loss. It is there in his stomach. Nobody knows that. So, because of that loss which has happened during transportation, which is normal, you cannot stop from happening. That loss you cannot stop from happening. Whatever steps you take, you cannot avoid that loss. So, because of that, what happened? The apple was eaten by the boy. What was the cost of that apple? 20 rupees. How many apples are remaining? 4 apples. 20 by 4. How much is it? 5 rupees. So, this 5 rupees got added to the cost price of the remaining apples. And the cost price of apples increased from 20 to 25. So, because of the normal loss, the cost price of the remaining goods has increased. Why it has increased? The cost price of the goods normally lost, that burden is now being bared by the remaining 4 apples. Okay. Now, meanwhile, father also comes from office. So, mother takes out 3 apples from the cover. She cleans them, washes them, cuts them into pieces. And again this guy comes back and he again has apple. So now they have eaten 3 apples. So according to the mother, what is the cost price of the cost of goods sold that is eaten?
75.
3 apples into 25, it is 75. But what was the real cost?
60.
Real cost was 3 into 20, only 60. But according to mother, it is 3 into 25, 75. Why has it increased? Again because of the loss which happened during transportation. Mother says, okay, there is some closing stock kept in the fridge. There is some closing stock kept in the fridge. According to her, what is the cost price of that closing stock? 25. What was the real cost? 20. So there is again loading of 5 rupees. From where did it come? It is the loss which happened during transportation. Is it clear? Are you able to understand? So how do you deal with normal loss? What is normal loss? Loss which is unavoidable. God cannot even stop it. Such losses are called as normal losses. I will give you examples once. Eggs are being transported from chicken farm to city. Even God comes, He cannot stop some eggs from breaking. Yes? Because the nature of the commodity is such that when it is being transported, because our roads are very good, beautiful roads we have, so when the lorry jumps up and down, the eggs will automatically break because of the weight. And they are very tender also. So you cannot stop anything. You know that some eggs are going to break. Whatever you do, you cannot avoid the loss. So some eggs have been broken. The loss which has happened is going to be spread over the remaining goods. The remaining goods have to bear the cost price of the eggs which have been broken. Is it clear? I will give one more example to understand it. Tomatoes you are transporting from a village to a marketplace. What will happen? Truck full of tomatoes. All tomatoes in the bottom will become tomato sauce, juice. Yes? Why? You cannot stop it. It is going to happen. Even if you put it in boxes, whatever tomatoes are there at the bottom of the box are going to become soup. We can say soup or sauce we can say. Are you able to understand? So such losses you cannot avoid. Oil, when it is being transported from one place to other place. When you transfer from one container to another container, automatically there will be some loss because some oil will stick to the walls of the container. You have to keep that container inverted for say 4-5 hours, then you will find that some more oil is coming out of it. Are you able to understand? Petrol, diesel, kerosene, when they are being transferred from one place to other place, some of it will go into thin air, mix into air. Evaporation loss, chemicals. So there are many products. Inherent nature is that some loss is going to happen. The nature of the product is that some loss is going to occur. Such losses are called as normal losses. So what should you do with the cost price of those goods which have been normally lost?
Increase.
The cost price of those goods should be spread over the remaining goods. The cost price of the goods will be inflated. The remaining goods cost price will be increased. If all the goods are sold, entire burden of normal loss will be bared by cost of goods sold. If all the stock is sold, what will happen? Whatever loss happened in transportation, entire loss will be included in cost of goods sold. If entire, we can say, stock is not sold, some loss will be included in cost of goods sold, some loss will be included in closing stock. Remember, mother 3 apples eaten, cost price 60, but according to her it was 75. 1 apple closing stock in the fridge, cost price 20, but we said it is 25. So closing stock will be inflated, cost of goods sold will be inflated. If all the stock is sold, no treatment of normal loss. The entire loss will be included in cost of goods sold. Is it clear? So because of normal losses, cost price of product is going to increase. Are you able to understand? Now what about abnormal losses? Abnormal losses. Now listen to me carefully, I'll give an example. There is a chicken farm, suppose 70-80 kilometers away from Hyderabad. Okay. Normally the chicken farm will supply eggs for about 1 rupee per egg to the shopkeepers here in Hyderabad. So they will bring the eggs in a big truck and then they will sell the eggs to the shopkeepers for 1 rupee per egg. Okay. One day when the truck was coming, it skid on the road and it did like this for some time and again came back. It was about to fall, but it did like this for some time and then again it was able to, God saved the truck, it came. But during this process, half of the eggs is smashed. Half of the eggs is smashed. Now the truck wala starts supplying the eggs to the shopkeepers at 2 rupees. Will anybody buy? Normally supplies for 1 rupee. Because today when he was coming, there was some circus on the road which happened. Half of the eggs were destroyed. So now he starts supplying the eggs for 2 rupees. Why?
Abnormal loss.
Half of the stock is destroyed. Only half stock is left. He has to cover his entire cost now. So now he is not selling the product for 1 rupee, he is selling the product for 2 rupees. Why 2 rupees? One egg is lost, 1 egg is supplied. He wants to cover this loss with the egg which is remaining. So he says 2 rupees. Shopkeeper will say, boss, no need, you take away. I will buy from somebody else. Why? Because they provide a cheaper rate. And what is the mistake you are doing? You are trying to cover your loss by selling the goods to the customers at a higher price. Even in this situation, when some circus happened on the road and half of the stock was destroyed, not normal, this is abnormal. See, normally some eggs will be destroyed and when you are fixed to sell the eggs at 1 rupee, that is taken into consideration. But when some circus has happened and more eggs have been destroyed than normal, in such a case, you cannot try to recover the cost price of the eggs which have been destroyed in an accident from the remaining eggs. You cannot start selling the product at a higher price. Are you able to understand? In such a case, what he has to do is, even though some circus happened, he has lost half of the eggs, he should still supply the remaining eggs to the shopkeepers at only 1 rupee. And in the evening, when he goes back home, he can say he should pray to God and say, from tomorrow onwards, no such circuses should happen on the road, because of which I have lost half of my stock and I have suffered a loss. He should pray to God and he should suffer that loss. He cannot try to recover the loss from the customers. Is it clear? If he tries to recover, what will happen? Remaining it cannot be sold. Remaining eggs cannot be sold because if you increase the cost price of the remaining eggs, nobody will be ready to sell. Everything will be a loss then. Is it clear? So, abnormal losses cannot increase the cost price of the goods. Is it clear? Okay, I'll give you one more example to understand it. There is a vegetable dealer. He goes to market early in the morning. Okay? And he brings 2 baskets of tomatoes every day. 2 baskets of tomatoes. He puts it on a TVS, 1 basket this side and 1 basket this side. 50 kgs, 50 kgs. And he is driving on a TVS. We can say, I think it is some, not Tuna, Hayabusa. So listen to me. He has one basket here, 1 basket here. Listen to me carefully. 50 kgs basket, 50 kgs basket. He has purchased this 50 kgs basket for 200 rupees. This 50 kgs basket for 200 rupees. 200, 200, 400. What was the cost per kg? 50 baskets for 200 rupees. No, 50 kgs for 1 basket, 200 rupees. 4 rupees per kg. This basket also same rate. 50 kgs, 200 rupees, 4 rupees. He paid. While he was coming, somebody threw a tomato on the road. He was driving a TVS. So it did some, we can say, circus on the road. And one of the baskets flew. It fell on the road. Just behind him, a bus was coming and has gone over that basket. and it has become tomato juice on the road itself. One basket gone. Okay. How many baskets are left? Only one basket. What is the cost he incurred? He has paid totally 400 rupees in the market for 100 kgs. But now he is left with only 50 kgs. He paid 400, not 200 for 200. 400 he has paid. Now he is left with only 50 kgs. He says now, okay, 400 by 50 kgs, 8 rupees. So now I should sell the, we can say, tomatoes to the customers at 8 rupees plus some profit. He goes to his shop and starts selling the tomatoes at 10 rupees, 12 rupees, 15 rupees. He has a competitor also just beside his shop. Now the competitor is selling only for 5 rupees. You are trying to sell it for 10 rupees. Will anybody buy from you?
No.
Why is the competitor going to sell 5 rupees? His TVS did not do stunts on the road. He got the one only for 4 rupees. He is selling for 5. 1 rupee profit is getting per kg. But your TVS has done some stunts on the road. You have lost your tomatoes and you have artificially increased the cost price of tomato in your mind to 8 rupees and you are trying to recover 8 plus 2, 10 rupees you are trying to recover. Will anybody buy?
No.
So is it correct for the trader to increase the price of tomato per kg in his mind from 4 rupees to 8 rupees? No, boss. The cost price per kg still remains at 4 rupees per kg only. He has to say, God, thanks for saving my life. Okay, tomatoes have gone, no problem. But you have saved my loss. I will suffer this loss. And tomorrow onwards, please see to it that such accidents don't happen. And you should sell the tomatoes, remaining tomatoes to the customer only for 5 rupees. 5 rupees. From profit he wants no boss. 4 rupees plus 5 rupee profit, he can sell it for 5 rupees. He should not try to recover that abnormal loss from the customer. He should debit that loss to the profit and loss account. Is it clear? But in normal loss it's not so. The price of the remaining goods will be inflated. The cost price of the remaining goods will be inflated. That is a treatment of normal loss. Are you very good understand? Very good. So we have thought a lot of stories about treatment of normal loss and abnormal loss. Let us do some problems. Come to page number 7.24. Come to page number 7.24, problem number 2. After hearing the story, you should be able to solve. X of Kolkata sends out 2000 boxes to Y of Delhi, costing 100 each. Consignor expenses is 5000. 1/10 of the boxes were lost in transit, were lost in consignee's godown and treated as normal loss. So out of all the boxes, 1/10 of the boxes were lost in consignee's godown and they were treated as normal loss. 1200 boxes were sold by the consignee. The value of consignment interest in inventories will be how much? Press on button on the calculator, will solve it on the calculator itself. Press on button. Tell me how many boxes were sent? 2000 boxes. What was the cost price of each box? 100. 2000 into 100. How much is it? 2 lakh. Plus consignor expenses were how much? 5000. Add 5000. So what is the total cost price of goods sent? 2,05,000. Out of these goods, how many were lost in consignee's godown and treated as normal loss? Out of 2000 boxes, 1/10 of the boxes were lost in consignee's godown and treated as normal loss. So out of 2000 boxes, 1/10 is 200. That means how many boxes remain? Only 1800. So divided by 1800. You remember 5 apples minus loss, normal loss, 1 apple, 4 apples. This is 2000 minus normal loss, 1800. Okay. Now you will get cost per box. How much is the cost per box? Loudly. Okay. Out of 1800 boxes, how many boxes were sold? 1200. Out of 1800 boxes, 1200 have been sold. How many are remaining in closing stock? 600. Into 600. 68,333 is the value of closing stock. Is it clear, everyone? I'll again tell you, press on button on the calculator. Type 2,05,000. Why 5,000 has to be included? It is consignor expenses, no. 2,05,000 divided by only 1,800. Why 1,800? Out of 2,000 boxes, 200 boxes were lost in transit. Not transit, in consignees go down and treated as normal loss. So 1,800, you will divide 2,05,000 by 1,800. How much is it? 113.88. Out of 1,800 boxes, how many are sold? 1,200. How many are closing stock? 600 into 600. Is it clear?
Yes, sir.
68,333. Suppose normal loss was not there, then what will be the value? That also we calculate. Press on button. Press on button on the calculator. 2,05,000 divided by 2,000 divided by 2,000 into 600.
61,000.
How much would it be? 61,500 only. But now what is the value we are saying? 68,333. Why? Because of normal loss. Is it clear? So because of normal loss, value of closing stock will increase. Okay. Now before we continue, let us learn the relationship between cost, loading and invoice price. Write down. Relationship between cost, loading and invoice price. C plus L is equal to I. C plus L is equal to I. What is this C? What is this L? What is this I? C is cost price. L is loading. What is I? Invoice price. C plus L is equal to IP or I. Remember, it is similar to C plus P is equal to S. So whatever relationship holds good for C plus P is equal to S, the same relationship also holds good for C plus L is equal to I. Is it clear? Write down. One problem you write down. Cost price of goods sent on consignment. Cost price of goods sent on consignment 1 lakh. Cost price of goods sent on consignment 1 lakh. Loading. Loading 25% on cost. Calculate invoice price. Calculate invoice price. See, please open your eyes, ears, brain. Cost price of goods sent is how much? 1 lakh. Loading is how much? 25% on cost. You remember, if profit on cost percentage and cost is given, you can multiply both of them to calculate profit. Same way here, you know cost, you know loading as a percentage on cost. You can multiply both of them to find out the loading amount. Write down. Loading is equal to cost into loading on cost percentage. It is 1 lakh into 25%. 1 lakh into 25%. How much is it? 25,000. 1 lakh into 25%. 25,000. Is it clear, everyone? Now, invoice price is equal to invoice price is equal to cost plus loading. 1 lakh plus 25,000. 1 lakh 25,000. Clear everyone? Next. Next. Next question. Invoice price of goods sent on consignment. Invoice price of goods sent on consignment. Invoice price of goods sent on consignment 1,25,000. Invoice price of goods sent on consignment 1,25,000. Loading 20% on invoice price. Loading 20% on invoice price. Calculate cost price of the goods sent. Again, remember, profit on sales percentage is given, sales is given. Multiply profit on sales percentage and sales, you will get the profit figure. That is what we have learned now. If you are given sales and profit on sales percentage, multiply both of them. Write down. Loading is equal to invoice price into loading on invoice price percentage. You are given both now, you are given invoice price, then you are given loading on invoice price. Invoice price into loading on invoice price percentage. Loading is equal to invoice price into loading on invoice price percentage. It is 1,25,000 into 20%. How much do you get? 25,000. That is loading. But I want now cost price. We'll write cost price is equal to load invoice price minus loading. Cost price is equal to invoice price minus loading. It is 1,25,000 minus 25,000. How much? 1 lakh. Same problem again. Write down now. Write down now. Cost price of goods sent on consignment 1 lakh. Cost price of goods sent on consignment 1 lakh. Invoice price 1,25,000. Cost price of goods sent on consignment 1 lakh. Invoice price of goods sent on consignment 1,25,000. Calculate loading percentage on cost and on invoice price. Calculate loading percentage on cost and on invoice price. Can you do it?
Yes.
Calculate loading percentage on cost and also on invoice price. How do you first of all calculate loading amount? Loading amount is the difference between invoice price and cost price. Write down. Loading is equal to invoice price minus cost price. It is 1,25,000 minus 1 lakh. 1,25,000 minus 1 lakh. How much is the balance? 25,000. This is the loading amount. I don't want loading. I want loading percentage on cost, loading percentage on invoice price. Write down. Loading on cost percentage is equal to loading on cost percentage is equal to loading divided by cost into 100. Loading divided by cost into 100. Loading divided by cost into 100. It will be 25,000 divided by 1 lakh into 100. How much is it? 25% on cost. Correct? Next. Loading on invoice price percentage. Loading on invoice price percentage. Loading divided by invoice price into 100. Loading divided by invoice price into 100. How much is it? 25,000 divided by 1,25,000 into 100. It is 20% on invoice price. Clear? One more question. Invoice price of goods sent on consignment 4 lakh. The goods were sent to show a profit of 33.33% on cost. Full stop. Calculate cost price of goods sent on consignment. Did you understand the question, boss? Invoice price of the goods sent was 4 lakh. But how was 4 lakh decided? The 4 lakh was decided in such a manner that we should get a profit of how much? 33.33% on cost, not on sales, on cost. So you are given invoice price, but profit percentage is given on cost. So how do you calculate? Use the help of the equation C plus L is equal to I. Write in your book C plus L is equal to I. C plus L is equal to I. Loading is 33.33. Ask onward. Cost. So what is I? This we know. If 133.33 is equal to 4 lakh, 33.33 is equal to how much? No, ignore change, 1 lakh.
1 lakh.
Don't fight for change. Exactly 1 lakh. Clear? Write down. Next. Write down. Cost price of, don't write it, right? Goods costing 3 lakhs rupees. Goods costing 3 lakh rupees were sent on consignment. Goods costing 3 lakh rupees were sent on consignment at an invoice price to show a profit of 25% on invoice price. To show a profit of 25% on invoice price. Calculate invoice price. Now can you multiply 3 lakh and 25%? If you multiply, tear your paper and throw it into the dustbin. Why? You are given what and what? You are given cost price of goods and you are given profit percentage on given on what? Invoice price. You cannot multiply. Okay. Take the help of this equation. C plus L is equal to I. C plus L is equal to I. What is L? 25. Onward. This question is very important. On invoice price. This is 3 lakh. This is question mark. This is also question mark. If 75 is equal to 3 lakhs, 25 is equal to how much? 1 lakh. Very good. I think this exercise is sufficient now for this. Come to page number 7.26. Question number 18. Page number 7.26. Question number 18. X of Kolkata sends out certain goods to Y of Mumbai at cost plus 25%. What does that mean? Loading is 25% on cost. Half of the goods received by Y is sold at 1,76,000 at 10% above invoice price. So Y received the goods, half of them is sold at a profit of 10% on invoice price. Invoice value of goods sent out is how much? I. How do we find? Okay, we'll take the help of two equations. Two simple equations will give us the answer. Look at the board. C plus L is equal to I. I plus profit is equal to selling price. C plus L is equal to I. I plus profit is equal to selling price. What is the cost of the goods? 100. Loading 25. Invoice price 125. This is 125. Profit is how much? 10% of invoice price. 12.5. 10% of this no? 12.5. Selling price 137.5. This we know 1,76,000. No. बख्श दो हमको 1,76,000 is the sale price of half of the goods. If this is equal to this, we can calculate invoice price of the goods sold. We can also calculate the cost price of goods sold. Is it clear? If 137.5 is equal to 1,76,000, 125 is equal to how much? Can you do it? 1 lakh? Do it on the calculator. 1,76,000 divided by 137.5 and multiplied with 125. 1,36,000 divided by 137.5 into 1,25,000. How much is it? 1,60,000 is the invoice price of stock sold. How much stock was sold? Half of the stock was sold. Double it into 2. 3,20,000 is the invoice price of entire stock sent. Question examiner can change. He can ask what is the cost price of the stock sent. Then 3,20,000 will be equal to 125. What is 100 equal to? You have to calculate. Calculate that also. 3,20,000 divided by 125 into 100. 3,20,000 divided by 125 into 100. 2 lakh? Over. But that is not asked, no. The question they asked for what? Invoice value of goods sent out. Is it clear? See, if you equate this, you will get invoice value of goods sold, not goods sent. What is the relationship between goods sold and goods sent? Half of the goods sent was sold. So double the goods sold, you will get the goods sent. Clear everyone? You don't understand? Over or not? I will get invoice value of goods sold as 1,60,000. But it is half of goods sent, no? If half is equal to 160, what is fully equal to? Double. 320. Next, problem number 19. Can somebody just open that door? Put that stop. Problem number 19. X of Kolkata sends out goods costing 3 lakh to Y of Mumbai at cost plus 25%. X of Kolkata sends out goods costing 3 lakh to Y of Mumbai at cost plus 25%. So X of Kolkata sends out goods costing 3 lakh to Y of Mumbai at cost plus 25%. So cost price of the goods is 3 lakh and you want to send it at a loading of 25%. Consignor expenses is 5,000. 1/10 of the goods were lost in transit. Insurance claim received 3,000. Net loss on account of abnormal loss is how much? Some goods have been lost in transit. Yesterday I told you that concept. When you calculate profit or loss because of goods lost in transit, you should find out cost price of goods lost in transit, compare it with insurance claim to arrive at profit or loss. But you cannot compare the insurance claim with invoice price. If you take invoice price, you have to remove loading to arrive at cost. Cost compare with the insurance claim to arrive at profit or loss. We can do it on calculator. Press on button. Type 3 lakh into 1 by 10. 3 lakh into 1 by 10. What is 3 lakh? Cost price of goods sent. What is 1 by 10? Proportion of goods lost in transit. Correct? 30,000 is the cost price of goods sent. Goods lost in transit. Memory plus. Then 5,000 consignor expense also up there. No, 5,000 to 1 by 10. 5,000 to 1 by 10. How much is it? 500. Memory plus. Two amounts have gone to memory. That is cost. Insurance claim. How much is the insurance claim? 3,000. Type 3,000. Memory minus. Memory minus. MRC. You get answer in plus or minus? Plus means cost is more than claim amount. If cost is more than claim amount, it's a loss. How much loss? 27,500. Very good. Next. Come to page number 7.29. I know two problems you don't know. I will solve them. Wait. Problem number 44. Page number 7.29. Problem number 44. This we have to solve on calculator. Press on button. If memory symbol should not appear, M symbol should not appear on your calculator. Okay. If it is appearing, type MRC, 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 See to it that memory vanishes. Okay. Press on button. Can you see M symbol on your calculator? No. Now you have to start using the calculator. Goods sent out on consignment 2 lakh. Please send me. Goods sent out on consignment. Where do we show in the consignment account?
Debit side.
Debit side is memory minus. Type 2 lakh memory minus. Just type the button which I have asked you to type. Don't press any extra buttons. We'll type 2 lakh memory minus. Did you do it?
Yes, sir.
Next. Consignee's expenses 2000. Debited to consignment account? No. 2000 memory minus. Cash sales 1 lakh, credit sales 1 lakh 10,000. 2 lakh 10,000 memory plus. Type 2 lakh 10,000 memory plus. Consignment inventory 40,000 closing stock 40,000 memory plus. Ordinary commission payable to consignee expense for the business. Type 3,000 memory minus. Delegatory commission 2,000 is also commission. Debit consignment 2,000 memory minus. Amount irrecoverable from a customer 2,000 bad debts.
M minus. Minus.
We should not record it on the debit side of the consignment account. Now type MRC. What? Okay, type 5,000 memory minus. Type 5,000 memory minus MRC. How much did you get? Is it the correct answer? Tick. So what you should not have done, you should not debit bad debts to the consignment account. Why delegatory commission is allowed? It is whose headache? Consignee's headache. Wait. Come to problem number 8. Problem number 8. How many people got this answer? Got it?
Did not say
Himnesh. Problem number 8. X of Kolkata sends out goods costing 1 lakh to Y of Delhi. 3/5 of the goods were sold by the consignee for 70,000. Commission is 2% on sales plus 20% of gross sales less all commission exceeding cost price. The amount of commission will be how much? Write down in your notebook. You will say total commission is equal to normal commission plus special commission. Total commission is equal to normal commission plus special commission. Total commission is equal to normal commission plus special commission. Next line you write. Normal commission is equal to normal commission is equal to 2% on sales. It is 70,000 into 2%. How much? 1400. Next. Special commission. Assume it has X. Assume it has X. Special commission. Please assume it has X rupees. Now read that sentence. Commission is 2% on sales plus 20% of gross sales less all commission exceeding cost price. What is that? I'll reread the sentence in a different manner. Commission is 2% on sales plus 20% of gross sales exceeding cost price less all commission. From that I can make some sense. 20% of gross sale exceeding cost. That means I have to find out what is gross sales, find out cost of goods sold. Difference. Out of that remove all commission. All commission means total commission. Whatever remains in that 20%. Let us try to do it in the form of an equation right on. Look at the board. It is special commission is equal to special commission is equal to 20% of gross sales exceeding cost price less all commission. This was the sentence. Now I have to rewrite it in the form of an equation. Special commission X rupees. It is 20% of gross sales exceeding cost price. Gross sales exceeding cost price. You have to find the difference between gross sales and cost price of goods sold. It is 70,000 gross sales less cost price of goods sold. See the equation? See the problem? X of Kolkata sends out goods costing 1 lakh to Y of Delhi. 3/5 of the goods were sold by the consignee for 70,000. So out of 1 lakh, 3/5 of the goods were sold. So 1 lakh into 3 by 5, 60,000. This is the cost price of goods sold. Sale price exceeding cost less all commission. All commission means total commission. What is total commission? I think you already know normal commission. How much is normal commission? 1400 plus special commission X. X is equal to 20% of 70,000 minus 60,000 minus all commission. All commission means total commission. Total commission means normal plus special. Special is X. Now open the equation. X is equal to 20% of 70 minus 60, 10,000. Minus into plus minus 1400. Minus into plus minus X. X is equal to 20% of 8,600 minus X. X is equal to 20% of 8,600 minus X. So X is equal to 172 minus 0.2X, correct? 172 or 1720? X is equal to 1720 minus 0.2X. 0.2X goes to this side. It will become 1.20X is equal to 1720. X is equal to 1720 by 1.2. How much is it? 1433? 1433.33 is the special commission. Now total commission will be 1400 plus 1433. 2833 will be the total commission. Clear everyone? There is one more commission problem similar to this. 24 everyone. So answer will not be 1433. Total commission is 1400 plus 1433, 2833. Is it clear everyone? See problem number 24. X of Kolkata sent out certain goods at cost plus 25%. So goods have been sent at a loading of 25% on cost. Invoice value of goods sent out is 2 lakh. Invoice value of goods sent out is 2 lakh. It is not cost price. 4/5 of the goods were sold by the consignee at 1,76,000. Out of the entire stock, 4/5 of the stock was sold for how much? 1,76,000. Commission is 2% up to invoice value and 10% of any surplus above invoice value. How do you solve it? Commission is 2% up to invoice value. That means if you sell the goods at invoice value, on that you get 2%. If you have sold the goods above invoice value, on that extra you will get 10%. Can you solve it? Press on button on your calculator. First of all, tell me what is the invoice value of all the goods? 2 lakhs into 4/5. What will you get? What will you get? 2 lakh is the invoice value of all goods. 4/5 of the goods were sold, no, into 4/5. What will I get? I'll get invoice value of goods sold. Invoice value of goods sold I'll get. How much is it? 2 lakh into 4/5.
1,60,000.
Take, don't you have a calculator? Then do it on calculator and tell me. 2 lakh into 4/5. How much is it? What is this? What does that mean? If goods were sold at invoice value, we would have got a sale of only 1,60,000. But did we sell the goods at invoice value? No. We have sold it above invoice value at 1,76,000. So how much is commission? 2% up to invoice value. So on this 2% into 2% you type 3,000 memory plus. On surplus 10%. Invoice value of goods sold. Same saree problem. Invoice value 1,60,000. Sale price 176. Surplus 16,000. 10%. 16,000 10%. 16,000 10%. 1,600 memory plus. MRC. Do you understand? So what did we do? We first of all found out if 4/5 of the goods were sold at invoice value, the sale would have been 1,60,000. On that I get 2%. But I did not sell for 160, I have sold it for more than 160, 176. On the extra I am going to get 10%. 16,000 10%, 1,600. Did you get the answer everyone? See problem number 25. Ram of Kolkata sends out good costing 1 lakh to Y of Mumbai 20% profit on invoice price. First of all, what I want you to do is, I want you to calculate invoice price of goods sent. Ram of Kolkata sends out good costing 1 lakh to Y of Mumbai 20% profit on, profit is 20% profit on invoice price. 20% on invoice price is equal to 25% on, I gave you pairs now, 2 times I have given you pairs till now. 20% on invoice price is equal to 25% on cost. So type, or we did problem today also, no? Same numbers. I forgot. 1,25,000, 1,25,000, 20% on cost, 20% on invoice price, 25% on cost. You saw those problems, no? Type 1 lakh plus 25%. What is that? Invoice price of goods sent. Goods sent, not sold. 1/10 of the goods were lost in transit. Minus 10% you do. See, 1/10 or 10%, is it the same or not? 1/10 or 10%? Is it the same? That is why I have said minus 10%. So what is the invoice value of goods reached? 1,12,500. Half of the balance goods were sold. Divided by 2. What is that? 56250. That is invoice value of goods sold. Invoice value of goods left unsold. Both are same. The amount of inventory reserve on consignment inventory will be how much? This is closing stock value at invoice price. How much loading is there? How much gas is there?
20%.
This is invoice price. We know the loading percentage on invoice price into 20%. How much? 11,250. Sir, first you use 25. Now you are using 20. Cheating. 20. Both are same. Whether you use 20% on invoice price or whether you use 25% on cost price, both are one and the same. According to convenience, you should change which percentage you want. See, I found stock at invoice price. If I again take 25% on cost, I cannot multiply. Why? Because closing stock is at invoice price and I am loading on cost. So I should search for loading percentage on invoice price because I can multiply 56,250 into 20%. Did you get the answer? Okay. So please solve the remaining problems on your own. Tomorrow, if you have any doubt, we'll discuss. Tomorrow we'll start a new chapter, joint venture accounts. 2 classes maximum. Tomorrow, when we have a class, tomorrow you have maths class? I'll inform. Before your law class is over, I'll inform them.
ये 1 है